The BRVM market recorded some gains in the previous trading session. Joining us now from Abidjan to give us an update on that market is Stephanie Simon, Head of Capital Markets at SGI Hudson and Co. Stephanie, thank you very much for joining us. Let's talk a bit about the liquidity in that market right now, because it's a common challenge for many frontier markets, especially in Africa. Do you think that that is improving in the BRVM right now? Because clearly when there's more liquidity, foreign investors are more attracted to the market.
Hi, I'm so sorry. I couldn't hear properly your question. Can you repeat?
I want to hear about liquidity in the BRVM. Would you say that that is improving? Because clearly if it improves, we're going to see a lot more foreign investor interest.
Yeah, generally we've seen volumes traded on the BRVM increase since the market adopted the continuous quotation back in September 2013. So for the last 12 months, for example, we're seeing about $1 million equivalent being traded in volume terms on the BRVM. So roughly $2.5 billion US on a week. Sorry, 2.5 billion CFA francs on a week. The only thing is that lately we have seen volumes coming off slightly. So instead of trading 500 million a day, we were seeing less activity in the market, and I would explain that mainly by the turmoil we've seen lately on emerging markets and to some extent on frontier markets. On the back of the Fed announcing that they were going to end QE, etc. Right.
Let's talk about, Stephanie, if we can hear your thoughts about the impact of the fall in commodity prices on the stock market, and which stocks in particular are feeling the brunt of that?
Yeah, so I would say that the sector that's been the most affected by falling commodities prices are the agri shares sector. So SAPH and Ponzi have been really affected by a massive drop in rubber price in the international markets. SAPH actually published their results for the first semester a couple of weeks back, and they showed sales were down by 38%. So on the back of a 31% decrease in the selling price in rubber, and also sales numbers down by 12%. So there.
Okay,
let's as a result, the net income was down 135%.
Okay. So clearly there's been some pressure on that stock. Okay, let's talk a bit about, let's move away from equities for a little bit and talk about the debt markets, because what I'm hearing now is that Senegal is looking to raise some funds from the markets. There's a 7-year bond, and they're probably going to issue at 6.5. Can you just talk us through that offering?
Yeah, the state of Senegal is issuing a 7-year bond at an interest rate of 6.5%. They are helping to raise 75 billion CFA francs, so that's equivalent to 140 million US dollar. The bond will pay an annual interest, and the notional is amortized on a yearly basis after 2 years until maturity. The rating of state of Senegal is B+ by S&P with a stable outlook, and B1 by Moody's with a stable outlook.
Okay.
And we expect most of the demand on this bond to come from the Wenu region.
Do foreign investors also participate in some of these local bond offerings? Because we know that the currency is pegged to the euro, so there's very little exchange rate risk if you are investing, for instance, from a European country. So is that making some of these bonds attractive to foreign investors?
Sorry, can you repeat the question?
Are foreign investors getting attracted at all to the local bonds issued by countries in the BRVM? So you mentioned Senegal, they're issuing at 6.5%. And if we have a stable euro and a stable CFA franc, that may attract some investors from Europe. So I want to find out from you if we are seeing foreign investors invest in the local bonds.
Okay. The CFA franc is pegged to the euro. It's a fixed parity of 655.957 CFA franc for €1. So there is only limited risk for euro-based investors to invest in the BRVM. But for now, we've seen mainly foreign investors involved in our markets on the stock, on shares, and not on the bond market, because the bond market is very much it's a lot of the players on the bond market are local players who are very much buy and hold. So the liquidity is not attractive enough for foreign investors who are who want to be able to find bonds. Actually, the liquidity in the secondary market is very small.
It's still that liquidity issue. Thank you very much, Stephanie Simon, Head of Capital Markets at SGI Hudson.